So then switching over to the kind of ETF topic, because I think I want to discuss this with a little bit of nuance, because obviously there's a very well-known ETF, I think it's SGOL, the iShares ETF, which at one point in time, I haven't looked recently, but at one point in time, it was supposedly physically backed, and you could take your kind of portion of ownership and actually exchange that for gold. And then there are other ETFs that market themselves as physically backed. So one question that I wanted to ask there is, just from your perspective, is there any truth in the ETFs that market themselves as physically backed? And would there be any reason to invest in one of those? Like basically, are there higher quality ETFs and lower quality ETFs? Or is it just all of that doesn't make any sense for the reasons we've discussed, and it just goes back to the point of holding physical gold?
It's a non sequitur discussion. It doesn't make any sense for the reasons we discussed. And I apologize. I should have addressed it in my previous answer.
Oh, no.
It's like plugging your backup generator back into the grid. I mean, what's an ETF? It's a hybrid fund that's between the mutual fund and a closed-end fund. And it has a complex structure of how prices of shares are equated to the value of the underlying gold. There are underwriters that are making markets. There are custodial arrangements that are at banks. So if we go back to the financial repression discussion, if we go back to the discussion of systemic risks, why would you want to buy insurance against collapse of Lehman Brothers from Lehman Brothers? I mean, it's basically because you will not get paid if your insurance expires in the money, if you will. Because by definition, the event against which you're insuring is the event in which you will not get paid. So whether there is real backing, whether there is no real backing is an issue, but that's a secondary issue if one is thinking of it as insurance. If one is thinking for speculating, buying today and selling 3 hours later, it doesn't really matter what you use. You can use ETFs. Yes, it's better to use ETF that's properly backed by gold. I mean, if they're saying it's backed by gold, let's assume that it is. There are a lot of conspiracy theories. Maybe it is, maybe it isn't. But what I'm saying is gold that's stored in a warehouse that's not connected to the financial system is insurance. Anything that's in the financial system, be it bullion bank, be it a broker-dealer, be it a custodial account at Vanguard or whatever it is in the financial system. And whatever risks that you're trying to insure against, those risks pertain directly to all those securities. Whether they're backed by gold, real gold or not real gold, doesn't matter. It pertains to all these things. So just like I said in the beginning, you don't plug in your backup generator into the grid. You don't get insurance against financial calamity in financial markets. I mean, you just don't. Best practices.